Hey folks, Tom Norfleet with www.citizenshipquickly.com. Wanted to talk to you today on E2 treaties. A lot of people want to get into the USA, although a lot of our viewers are trying to do the opposite. I relinquished my citizenship many years ago. I would not be interested myself in doing it, but we do have quite a few people that want to go, usually from the Middle East or China, that's trying to get into the United States. And we do have some people that are U.S. citizens that relinquish their U.S. citizenship that are actually thinking about relinquishing their U.S. citizenship and then going back in and setting up a business in the U.S. and then not having to pay taxes on their worldwide income. Is it possible? Yeah, but I would talk with an accountant and also an immigration lawyer on doing that. We can recommend some good people for you. But I'm not a lawyer, and I don't do accounting work, but I can tell you how to get some of the pieces of the puzzle together. If you want to literally be in the U.S. and not be taxed on income outside the U.S. Let me tell you how the IRS works pretty much. They tax green card holders, which are permanent residents. They also tax citizens on their worldwide income. So those two type of people, that they will tax worldwide income, not only income inside the country, but also outside the country. There's also another test called the substantial presence test. And these are people maybe that don't have green cards, they're not U.S. citizens, but they stay in the U.S. too long each year that qualifies them to be taxed on income, not only inside the U.S., but also outside the U.S. too. And these are people that, I'll give you an example for the people who want to try to get an E2 treaty, company set up in the United States. The way it works is you have countries that qualify for E2 treaties that have agreement. Those countries have agreements with the U.S. where that citizen from that country can go in and set up a company in the United States pretty quick. In fact, the quickest way to get in the U.S. You can do it as quick as 3 months. But you have to be from a country, like I said, that has, where you're a citizen of that country that has an E2 treaty with the U.S. I'll just tell you some countries, like for instance, Pakistan does have an E2 treaty. India does not have it. Now, those citizens can qualify through an L1. I'm not going to go through the L1 today. It's a lot more complicated, and it's not as good as an E2 treaty because there's more hoops that you're going to have to jump. But the E2 is really the best and easiest way to get in. If I had to tell somebody what's the best between an L1 or E2 and EB5, I would definitely use an E2 versus an EB5. But let me tell you the advantages of an E2 and how you can go about getting it set up. First of all, you can set it up by putting in as little as $50,000, although most lawyers will tell you if you want to keep from wasting time, you really should go around $100,000, although I have seen them go in under $50,000. It depends on the type of business that you're in. And the Immigration Department of the U.S. will not tell you based on that business up front, whether, I'm talking about before you apply, whether that $50,000 is going to be cheap enough as an investment, a low enough investment to where you're going to qualify. You literally have to take the chance, and you're going to have to pay the legal fees up front. And so if you botch up, the legal fees don't come back. So a lawyer will tell you pretty much, it's a guesstimate pretty much if that type business that you're trying to put in the U.S. is going to fly. Okay, but there's usually no guarantees. So you're taking a chance if you go lower than 100,000. 100,000 usually gets in. If you go under that, you're taking a chance, okay? Some get through at 50,000, some don't. If you're looking for positions like a doctor or lawyer, there's specifications that you're going to have to pass on top of the requirements for the E2 that you got to make sure you have those requirements in the U.S. or you won't be able to get through just the traditional E2 channel. You'll have to get those other requirements out of the way. So how does it work? Well, you apply. It takes about 3 months to get in. It's the fastest way to get in the U.S. Once you get that status, you can, if you don't stay in the United States in more than typically 120 days a year. And I'm giving you a basic amount of time being in the U.S. At the time you look at this video, you need to look and do a Google search on substantial presence test to find out what that time period is. 120 days should get you under the line right now, but the laws could change in the U.S., so you need to check and find this out yourself. But 120 days is basically should get you under that substantial presence test. If you stay in the U.S. less than that per year, you're not a U.S. citizen, you're not a green card holder, okay, then you should not be taxed on your assets that are outside the United States, okay? You're still going to be taxed on the company, on the profits in the United States for your company that's that you set up the E2 treaty with, or that company that you set up in the U.S. But you would still have to, watch the days that you're coming in to make sure it's under 120 days. Now, why I'm telling you this? Well, there's people that are coming in the United States that are from the Middle East, and they don't realize how strict the U.S. is on taxes. Okay, they'll come in and they might be from Pakistan and never report their taxes. I would tell you, if you've got a lot of assets, unless you're planning on staying in the U.S. less than 120 days a year, don't go to the U.S. because you're going to have really high taxes when you move in. Okay, state, federal, Social Security counting at least, I would say, depending on what state it is, I'd say anywhere from 30 to 50%. Okay, when you figure all those taxes together, even with Trump being in office right now. And the taxes are probably the lowest they've been in my lifetime since he's in office now. But the fact is, you still have to add state, federal, and Social Security unless you move to a state that has no state taxes. So once you get your company set up, you can move your whole family there, which is nice. And you can stay in the U.S. as long as you want, as long as you keep that company in existence under the E2 treaty. If you're from a place like India that doesn't qualify as an E2 treaty, you can get citizenship real fast in countries like Grenada. Grenada has an E2 treaty with the U.S. So if you get citizenship with Grenada, which takes about 3 to 4 months, then it'll take you another 3 months to get the E2 treaty established in the U.S. So you're looking at 6 to 7 to 8 months right in there to get everything finished. If you're from India and you don't want to get the fast track program, then you'd have to go under the L1, which I'm not going to explain today, but it's a lot more complicated. You're going to have a lot more hoops you got to jump. If you got a lot of assets, I would go with the Grenada option and then get in with the E2 treaty. It's going to be a lot better. Okay. Now you can also get a fast track program to Turkey, and you can get citizenship there in about 3 or 4 months. Getting a property, they have several options there, which you'll have to look at another tape on that, on the Turkey option. We have other tapes that will explain how that works. But I wouldn't go that route. Let me tell you why I wouldn't go with Turkey. We never advise people to get a second passport with a country that taxes worldwide income. Now, you might say, well, I'll never move to Turkey. You might not. But I always tell people, if you're going to invest money in a citizenship program, get in a country that if you move there, you would like their tax laws. I see so many people end up saying they're not going to move to the country, and they end up doing it. And then they go, damn, I moved from a high tax country to another high tax country. That's what I'm telling you. Don't get a second passport in a country unless they have a territorial tax system or it's a pure tax haven. Turkey is not like that. And they're also trying to become a member of the EU, which will probably just make their situation worse. Their top tax rate, too, as I'm talking today, is like 35%. If you want to pay taxes like that, then go that option, okay? But most of our clients don't want to do that. Most of our clients have a net worth of at least $2 million and up, and they're looking at ways to minimize their taxes or get it down to zero. And that's not a way to go. Grenada, you can get your taxes down to zero, okay? If you move there, because Grenada has a territorial tax system in place. They do tax income inside the country, but not income outside the country. So you can get around, high taxes by getting citizenship there if you move there. So anyway, that's the option I would go on. Now, let me hit back another scenario. Let's say that you're a U.S. citizen and you're trying to avoid taxes outside the country, outside the U.S., worldwide, outside the U.S. Then you could relinquish your U.S. citizenship, and then you could come back in under a Grenadian passport, get a business set up through an E2 treaty, since you now are a citizen of Grenada, have that company set up, okay, and not pay taxes on income outside the U.S. You're still going to have to pay taxes on income, that's inside the U.S., on your business. But income that's made outside the U.S., you won't have to pay for that as long as you don't go into the substantial presence test where the U.S. is going to start taxing you on your worldwide income. That means you're going to have to get a pretty good manager for your business, because you can only go in a certain amount of time each year, which is roughly 120 days. So you need to decide, can you get a manager to manage that business to where you're not going to have that taxation, on that business. Taxation on your worldwide income, because your business is going to be taxed no matter if you're there for 10 days a year or whatever. You're still going to be taxed on that business, because that business is in the U.S. If you want to get around the taxes outside the U.S., you have to organize your time to where you're not in the U.S. more than 120 days each year. So this is something you can look at, and there are people that do that. They scoot in the U.S., they're out of the U.S., and they do a lot of things by internet and phone calls to whoever's running that business inside the U.S. through that E2 treaty. So, these are ways that you can do it. If you're a U.S. citizen, if you're a green card holder, it's not going to work, okay? Because you're taxed on your worldwide income. No matter, and you have to give up the green card, you have to give up your citizenship, not be taxed on your income worldwide. So this is a little loophole. How long it will last, I don't know, but it's been there for a long time, because the substantial presence test is how they hit you on income assets, outside the U.S. is based on this substantial presence test. Anyway, if you got a question or a comment, also if you want to get your taxes to zero, close to zero, visit our website, get help, go on our website, seek help from us. If you don't get it from us, get it from somebody. There are ways you can get your taxes to zero or close to zero. If people are telling you that there's no way to do it, that they don't know there are other options that you can do, and we'll tell you how to do it and how to go about doing it. And if you want new videos as they come out, hit the subscribe button to the right of your screen. We'll get those out to you as soon as they come in. And look forward to talking to you on the next video. Take care. Bye.